It starts Monday. I'm your host, Steve Van Metre, and thanks for joining me today. And our show today, it's a countdown to chaos as Monday marks the start of a stock market nightmare. We're going to show you what the event is and why it's such bad news for stocks. Plus, we're going to take a look at the technicals, the momentum, and machine positioning of the broad equity market, the bond market, the metals and currency markets to show you how to be positioned on your trades as we head into this week. Not to mention, we also have our sponsor for today's show. Imix Biopharma is back. You may remember them. They trade under the symbol on the NASDAQ, IMMX, and their stock is breaking out of a trading range. The last time we featured a company on this show that was breaking out, the stock went vertical. You don't want to miss out on this. Again, the symbol IMMX. Stay tuned to the end of the show where I'm going to make the case where the stock could go up by as much as 63%, or check out the pinned comment or description below for more information. Now it's over to Goldman, where we kick today's story off with their tactical flow of funds for the third quarter. This is an update, and they're saying, I think this is a no rules market, and flows over fundamentals are the drivers of price action. What they're suggesting here is who's in charge, the buyers or sellers into the end of the quarter. We're going to show you why it is the sellers, but that flips going into Q4. He says, I'll sound the alarm bells when the elevator is down, and we can ride the escalator up into the end of the year. As we look at the seasonals, we're middle of the worst seasonals of the year. We've been telling you about this for weeks. It surely feels bad, but statistically, this is normal. Keep in mind, when we look at gamma, this is how the dealers are positioned. We see the largest short gamma in our database, 3.3 billion to buy for every 1% move higher, and minus 3.3 billion to sell for every 1% move lower. And this flow will help exacerbate moves to the downside or upside. But of course, we know that the more likely case that we're going to make today is the market is headed down. So what this means is as stocks get sold, dealers are selling too. You're going to see some outsized moves. Now, from a trading perspective, this is what you want to see. You want to see big moves because you want to take advantage of the move after that. Let's take a look at what machines are going to do. Here we look at Goldman's CTA model. They estimate minus 48 billion of global stocks for sale in a flat tape over next week, and 64 billion for sale over the next 1 month. They said this is very front loaded into the next week. So you think about this from the dealer gamma positioning. As the machines sell, well, that means the dealers are going to be selling as well. Look for big moves there, and potentially that would cause volatility spike. And Goldman's warning that these vol control funds, now if you're not familiar with what a vol control fund is, as volatility goes down, they buy stocks. And so right now we know volatility is low, stock prices are high. If you start to see volatility rise because machines are selling and dealers are selling, well, that means these vol control funds will sell, and that will put further pressure to the downside. And they know that, look, these things are long as they normally can ever get, meaning any move higher in volatility, these machines, they're selling too. But where is the opportunity? Goldman notes in their report, it's in the bond market. Look at this. We have 319 billion. That's a ton worth of bonds to buy in an up 2 standard deviation tape over the next month, and 64 billion worth of bonds to buy in a down 2.5 standard deviation tape over the next month. No matter what we see here, Goldman's saying machines are buying bonds. They estimate the current CTA bond short is a whopping 263.3 billion. So you look at where the opportunity is, potentially in the bond market, the equity market, looking like it's going to sell off. Let's take a look now at TD Securities and see what's going on there, because according to their models, they're kind of in a dead zone right now. You need to see over 4,400 to buy, and they run a very fast algorithm, much like Nomura, under 4,250 to sell. So we see a breakdown under 4,250. Look for these machines to accelerate their positioning to the downside. But we've been warning you about this because our own machine positioning model, CTA-Timer Pro, you see it down here. It told you that this was already an extreme move. It told you to be out of this market. We warned you. Our subscribers have it. It's a mere $30 a month. Even our Momentum Timer Pro, which you can access in the description below. 20 bucks a month. You get to lock that in and use the coupon code or the link, and you get the first month free on me. 9 consecutive days of selling. This runs technical signals and smooths them all out for you. Makes your job easy. Looking at the S&P 500 now, momentum negative. RSI 34. This is darn near oversold territory, but remember, it can get worse. MACD's got a negative cross. Traders are looking now to see this flip, but what Goldman's saying is the risk now to the downside. Again, both of our reports called us way ahead of what you're seeing, so you can access both of them. Again, check out the links in the description below. Next upside target, 437.70. That'd be your 100-day moving average. Downside target, 416.83. That's a ways down. Let's take a look here. 416.83. You're talking getting right down into this supply zone here, and that's what you want to see as we look at the 2-year daily chart here. That's a little bit below the 200-day moving average, but why there? Because previous zones of resistance, which was here, now become zones of support. So we would look for buyers to step in, starting at the top of that. You see the volume profile, so it can get all the way down maybe into the 410 range there and still hold nicely. Right now, we noted that upper end supply zone. That was where the sellers were at. We warned you that the sellers were there. Move now to the downside, 416, possibly all the way down into the 410. And if it gets really out of control, now you're looking at the volume profile line of 369 being the major level of support on this 2-year chart. So keep that in mind. If we see exasperated selling, that's where it's going. But Invesco QQQ, that's our tech stocks, momentum negative. RSI, we see that at 40. Again, not very strong with momentum to the upside at all. This is all downside momentum. MACD's got a negative cross. Our own Momentum Timer Pro report. Again, it takes all these technical signals, adds them all up together, smooths them out, puts a little bit of momentum magic in them, if you will, gives you 9 consecutive daily sell signals. So it told you, if you trade momentum, this report will save you time. It's a mere 20 bucks a month. And as I said, you get the first month free. Use the coupon code in the description at the cart. Next upside target, 369.84. That's a 50-day moving average. We're saying not likely because the big event, now you want to know what that big event was that's coming on Monday, and it affects tech stocks. That's why I wanted to wait here to tell you, is because 90% of the market, of the big broad market, is in the buyout blackout window. That means these big companies aren't buying their stock back. They're not putting support under the market, and that means it comes down in a huge way. So watch out for that. There's your big risk that happens starting on Monday. Downside target 338.82. Look, our machine position was well ahead of Goldman and TD Securities, telling our subscribers what they needed to know to get out. They had the Tandem 2 reports, giving them all the confirmation and confidence they needed to lock in those gains. We told you about that last week as we closed out all of our equity positions here. So looking at QQQ now, downside target 338. That is right down in here where this purple line is. That's the first move, and there's not a lot of support beneath that. You get down below there, and your next level of support here is right around 318, 320 range. So it needs to find buyers here, but without the corporate share buybacks going on, there's a big risk. If you see the machine start to push this to the downside, you see those vol control strategies get out of hand, next thing you know, this thing is going to drop easily into that 320, 318 range. And look at the RSI. You see momentum to the downside. You see the MACD, momentum to the downside. This thing is not bottomed out yet, my friends. But going into Q4, well, the buybacks get bigger. It's the biggest quarter for corporate share buybacks. You don't want to miss that. That's why you want to get positioned right here with your trades and not take losses you don't need to. How about the bond market? Now this, we look at TD Securities, 109.77 to buy. That's on the 10-year. That's a bit above the current price, so no support from the machines. And as Goldman noted, that it takes a big move for them to buy, but with that big move comes watch out. Momentum is negative on TLT. RSI massively oversold at 29. It's got a negative cross on the MACD. Our Momentum Timer Pro's got 9 consecutive daily sell signals, and so that is, again, telling you on the trades earlier if you were using it to get out. But look, we've got this buy it open. We are holding it March 20th because we didn't tell you to put a stop loss. We want to show you what happens if a trade goes the wrong way. We've added to another position Our cost basis 193. Friday's closing 88.69. So what we're going to do, we're going to wait for the next move. These are minus 100% short. This is the gold type of signal we look for in our CTA report. We tell our subscribers when this short position moves up from minus 100%, that's where you want to take a position. If you have the report, you can see it, you can take advantage of it, you can confirm it with Momentum Timer Pro. Again, you can get that first month for free still in the description below. Upside target, 21-day moving average. We hit our downside target, no problem. I revised that a lot lower. Buyers are looking like they're coming in here. Let's take a look at TLT now and see what's going on, because we're bouncing off oversold territory once, twice, three times. The MACD, it's down, maybe bottoming out here. Let's zoom in. We see this big heavy selling in overnight markets just driving the tape down, and then we see the US markets as we zoom further in here putting pressure, and then all of a sudden buyers start to step in here. But notice these open gaps of volume. That's where price can move very quickly through. So your upside target here is a 21-day moving average. You'll notice where you see that volume, that's the next layer to get to. We think there's an upside move into that. Possibly there's where you pick up the machines, start to trade this market back in and cover shorts. And then you can look at the MACD bottoming out, looking like it's heading up here. So opportunity potentially in the bond market well over the equity market, considering we know we're in the heavy part of the buyback blackout window. You got to look for opportunities to trade elsewhere, and right now the bond market may be your next best bet. But how about gold? Many of you are super bullish on gold. We told you gold was coming down. Many of you said in the comments, not a chance, Steve. You've got this all wrong. You have no idea what you're talking about. Well, sure enough, what did we see? Gold is coming down, selling below 1880. Now, this from TD Securities. That means there's going to be selling pressure going into Monday's open. And we noted there was a triple top on gold. Many of you said that's bullish. We said, no, it's never bullish. Then we showed you there is a inverse or a head and shoulders pattern. Many of you said that's bullish. We said, no, it's not. That means sellers are there. And now we've got the signal. Momentum's negative on GLD. Now it is massively oversold at RSI at 25, but the MACD's got a negative cross. But you know who doesn't care about that? Not me. The machines don't. Look at this, 4 consecutive daily sell signals on our Momentum Timer Pro report, giving you all the warning in tandem with our CTA Timer Pro that was going short on this thing. So you had all the signals you needed if you were trading gold to get out of this thing. Upside target 178.45. Next downside target, I revised a little lower. I know some of you are shocked. 168.82. Let's take a look at GLD here. Let's go zoom out real to the big picture, 5-year window here. And what do we see? Beautiful triple top. You see it 1, 2, 3. It comes down here. What do we see? Left shoulder, big head, right shoulder. There's your head and shoulders pattern. Let's zoom into that on the 2-year chart. What happened? Price came down. Bears got greedy, and no certainty there as the buyers came in, squeezed them a bit, and the seller said, we got you once, twice. And there goes price. So we're saying 168.82. Now that is right down into this zone here where that purple line is where we're saying support is at. If you break that, it's going down even more from there. That's the next level of support. Upside target, you're looking at these moving average, mainly this 179.31 to the upside is where you're really looking at, but no signal that tells me that this is nothing more than a falling knife heading lower. And I know many of you are disappointed. Said, Steve, it can't happen like that. Well, it does, and that's the problem. You see this beautiful chart again. So I think I didn't have it overlaid. 5-year chart here. There it is, 1, 2, 3, triple top. Zoom in. What do we see? Left shoulder, head, right shoulder. There's a neckline. Broke the neckline, reconfirmed and failed. Price goes down, breaks below there. Watch out below on the futures. Now you're talking a breakdown somewhere under 1840. I know many of you are looking to buy, and that's what we're trying to tell you here. This is a market to trade, not a market to own. How about gold miners saying the same thing? Where the metal goes, the miners follow. Momentum's negative here. RSI's at 32. MACD's got a negative cross, Momentum Timer Pro, 4 daily sell signals saying, hey, look, you know what? Maybe it's bouncing here off support like we told you. We're holding no position. Next upside target, 29.41. Downside, 26.62. Unchanged. It breaks that. We're in trouble. Look at this. CTA report told you earlier, get out, get out, get out. 4 days ago, so did our Momentum Timer Pro report. So everything you need to trade. You know, we have some people say, you know what, I've gotten rid of all my other reports because of yours, and you can too. Look at this, sitting on support here. Now, we said if it holds here and takes off, you can take a short-term trade. Not looking good. This breaks down. You see GDX is going to make a meaningful move lower. This is a big risk. This means this is a market to trade, not to own. If you're going to trade this, put a stop loss underneath here, and just in case it fails out, otherwise, just hold off. I think you're going to get a much, much better entry point, even though we're oversold. So don't be surprised if it bounces here. But I don't think the momentum is going to shift that quickly. But again, if you trade this, trade it with a stop loss for sure. How about the dollar? Here we see momentum still positive. This thing is on a tear. And who told you about the dollar? We did. Remember, when this thing was minus 100% short on our CTA program, all of you said, the dollar's doomed. And we said, no, watch it reverse. And we nailed it perfectly, as did our Momentum Timer Pro report. 48 consecutive daily buy signals. You want to see something you don't see too often? 1 month window maxed out, 3 month window maxed out, 6 month window at a mid-size strength momentum wise. What that tells you is when this thing reverses, there's another trade that you can capitalize on, and we give it to you every day. You can just log in and get the reports. Here we see upside target, and again, not high conviction on this, but it's been doing it. $30.04. Downside target, 50-day moving average on the dollar. Let's head over to the DUUP here. And what do we see? Next thing you know, this thing has just got a little bit higher to go here potentially and starts to run into more resistance up here. Downside target is a 50-day moving average. Remember, a cross of a moving average and then an eventual reconfirmation is bullish. So we got to look for the first move to the 50-day moving average to see what price does before we do anything. Massively overbought. So again, look for a trade the other direction. If you're looking at the dollar, don't be long here. How about platinum? This is another trade that we put on through our reports. Didn't go the right way, and not all of them do, but most of them tend to. Here we see momentum is negative. RSI is at 45. MACD's got a negative cross. Momentum Timer Pro says 4 consecutive daily sell signals. And we've got 1, 2, 3 positions on this that we added in. Cost basis 87.56, closed at 83.62 here on Friday. What we're saying is, look, we're going to add more positions. It says here, add on the next move. What are we watching? The CTA report. If this thing flips from a short position, starts moving up, that's where you add. We're going to keep doing that, and you're going to see how you can dollar cost average your way out of a mistake or a trade that didn't go right using the report, because they're not all going to be winners. You can't do that. But look at this. You see 1, 2, 3, 4 bottoms in the past. 1, 2, 3, 4 bottoms, price rally. And so we zoom out a little bit more to the 5-year chart. And we know when it gets clustering in a certain zone and it holds support, it tends to rally. We still say that is the case here. Platinum, we need to see this thing get up to a price of 87.56. So we need to see it kind of get right up into here. It's not too far out of reach. At this point, we're looking to close that position out, but I still think it could get up to as much as a 100-day moving average. That's what we're noting. Put your stop loss or sell order when it breaks out up that level and get out at that point and just hold your gains. That would be a small gain, but hey, it's better than eating a loss, which a lot of people do if they don't put their stop losses on appropriately. And that is a major issue for traders. They either don't use stop losses or they use them in the wrong spot. But one place we see is having a major breakout forming. That is a sponsor of today's show, MX Biopharma, under the symbol IMMX. Let's take a look at what's going on with them, because I am really excited. Again, last time we saw a breakout on this show, the stock went crazy. And here you can see you got the website, all the information in the description below and the pinned comment. The US FDA, Food and Drug Administration, just recently approved an orphan drug designation for their NXC-201 as a treatment for amyloid light chain amyloidosis. So check that out. Here's their stock. We've been talking about it needed to break this $3 range because every time it got up into that range, sellers showed up. So we've added in the supply zone. That's where the sellers are at. And you know, when we break out of that zone or a zone, a stock can go up a lot. And what are we looking at? There's not a lot of resistance here because you see there's not a lot of people trading this stock in between these zones. A move all the way into the supply zone where the last time we saw sellers, there's your 63% move to the upside. All this thing needs is a push. And next thing you know, it's got all the potential to skyrocket. We've seen this before with sponsors on the show. Here you can see it came down and broke out of that supply zone, came down, reconfirmed it, and now making a move up. We see the momentum here positive for MX, and we think that is a huge opportunity. But as always, with any company we feature on our show, you're under no obligation to purchase a stock. Be sure to do your own research before placing any trades. And with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.